August was a severe month for financial markets. Risk aversion spiked and investors flowed out of any asset that would be perceived risky into safer havens. Government bond markets in the UK, US and Germany benefited, while gold traded at a record high. The yield on the German 10-year government bond fell to a historical low level. Global equity markets sold off sharply and European equities in particularly underperformed. The sovereign debt crisis in Europe has spread to the larger economies of Spain and Italy. Their yields have spiked. This spike has been curbed by some of the ECB bond buying purchases, but there are concerns about the ability of the ECB to continue to do this, particularly given the issuance that both the Italian and the Spanish government have to do before the end of the year. Investors are concerned that the policy response to date by the European policymakers is inadequate to deal with the larger economies. In the US, the S&P came out and downgraded the US credit rating. This was a shock to the markets. It stated that the lack of political consensus in US policymakers to deal with the high debt and deficit, and these issues have not yet to be resolved. Finally, the economic data has also deteriorated. In Europe, the leading indicators are now very close to recessionary levels, as they are in the US. Volatility and risk aversion continued into September. We are now looking for the following signs to see some stability in markets. Firstly, we would like some stability in the economic data. It is continuing to weaken, and if it were to stabilise at these levels, we would be confident that we wouldn't be going into a recession and it would be more of a slowdown in economic growth. If policymakers in Europe were to come up with a more adequate response to the crisis, it would also help. Firstly, they could increase the size of the ESFF fund, which is the emergency fund that is available to countries who are in difficulty, to cover Italy and Spain. This would provide confidence. Also, they could come up with a more coordinated solution for the Eurozone region and fund countries together. However, there is a lot of political disagreement around these responses for now.